What is up everybody, welcome to another stock market video, and today I'm going to be talking about Tesla stock and what happened on battery day. I want to look at in depth about how they revealed with their plans to scale up production of over 3,000% towards the year 2030. I'll be focusing on their high volume capabilities and also their huge claims of wanting to produce 20 million cars per year. So this is really important because Tesla stock is worth about 35 to 40% of my entire portfolio, and I think battery day was a really important day to show us their plans towards the future. So if you're new here, my name is Gifford. I started investing into individual companies about 3 months ago. I've primarily started investing in growth companies as I try to figure out how to build my wealth. So don't try to copy me for stock advice because I'm really new, and basically all I'm doing is documenting my journey and showing it here on my channel. So I show all my trades here on the channel and I try to be transparent with everyone. I basically just watch a whole bunch of YouTube videos and learn online about the companies that I'm investing in. As always, hit the like button to support the new channel and also subscribe to keep up to date. With that said, let's get on with the video. So first, I just want to make it clear that Tesla is not a car company, they're an energy company, and I'm holding for the long term, so a minimum of 5 to 10 years. So right now, I understand that their stock price is overvalued and very expensive, but I'm looking towards the future. So as a long-term holder, I'm really looking at their autonomous car technology and also their clean energy business. For when we look back, we're going to think that the stock is really going to be cheap. So quick format of the video: part 1, share price action and why the sellout. Part 2 is a CNN news clipping talking to ARK Invest and her thoughts on battery day. Part 3 is the manufacturing of 20 million cars per year, and part 4 is my final thoughts about battery day itself. So currently Tesla is at a price of $421, but we can see here at battery day it was at $424, and after it came out that the share price tanked by about 14%. So we can see here that the price dipped all the way down to $364, and in my opinion the short-term traders decided to do a sellout, and also the fact that there was no short-term good news for Tesla. So a few days after, we can actually see that the stock price has recovered quite nicely by up to 15.7%. So I was actually surprised with the sellout because on battery day they actually revealed a lot of things going into the future and a lot of big things to happen. So before we continue, I just want to show my current Tesla holdings. So I've got 8 shares in this account at an average cost of $344 and a return of 22.1%. So for part 2, we're just going to watch a quick CNN news clipping about a summary of battery day, but just a quick disclaimer, I'm not a battery engineer, so I don't really understand all the battery technology that they revealed on that day. So basically I just have to take Tesla's word for it and follow along with their progress, but I just want to point out that Elon Musk is known for his big ideas and actually following through with his actions. I know that Tesla's timelines don't always match up, however they do deliver, so I wouldn't want to bet against them.
What was most revealing about what you heard yesterday from Elon Musk and crew?
Well, I think that the key takeaway here is, you mentioned the $25,000 car. Tesla is reducing battery costs by 50%, increasing range by over 50%, and reducing investment, so the cost to build factories, by 70%. I mean, if you're a traditional automaker, you must be so scared right now. I mean, you're trying to save your core business in the pandemic. And on top of that, you're trying to build an electric autonomous vehicle. And really, none of them have successfully done that, especially on the EV front.
Perfectly summarized the key takeaways from battery day in such a brutal way of what is to come for traditional automakers. So it's obvious that these traditional car makers are going to have to pivot if they're going to survive the long term. I see that the market is big enough for everyone, but certainly Tesla is leading the way. So one of the key reasons I was comfortable with investing in Tesla is because I've got a background in high volume production manufacturing. So I hope this gives me some sort of advantage when I'm reading their data and statistics of whether they can actually go through with these plans. Just before we carry on, I just want to show you this article here that Elon Musk wrote, and you can find this in the Tesla investors page. So the title reads "The Secret Tesla Motors Master Plan," just between you and me, so it's quite cheeky, and it's written by Elon Musk in August 2nd of 2006. So reading here, in short, the master plan is build sports cars, use that money to build an affordable car, use that money to build an even more affordable car, and while doing above, also provide zero emissions electric power generation options. And right here, he outlines the master plan part 2. We can see right here, it was written by Elon Musk, July 20th, 2016, 10 years from the first one. So this is why battery day was really important in the advancements of batteries. So basically on battery day, I don't think many people got how important it was because it really follows this plan outlined here. Create stunning solar roofs with seamless integrated battery storage. expand the electric vehicle product line to address all major segments, develop a self-driving capability that is 10 times faster than manual versus massive fleet learning, enable your car to make your money for when you aren't using it. So really, I don't think you want to bet against a guy who predicts things in the past and then actually follows through with them in the future. So looking at this news article titled, Tesla says it's got better batteries as it chases 20 million vehicles per year. So this article just outlines the key points that was presented on Battery Day with these key slides. One slide that stands out to me is about their factory space and how they're going to be more efficient as they chase to make more cars every year. So reading from this article, it says long term, Tesla wants to make 20 million vehicles a year, roughly 50 times as many cars as it currently does, and about double what the biggest automakers make yearly today. Let me just repeat that. And double what the biggest automakers make yearly today. That's a huge claim. A $25,000 Tesla would go a long way towards that goal. Since I think many would-be buyers, the biggest holdup for Tesla is still the price. So I talked about that in my last video, how in New Zealand a Tesla is still unaffordable for the average person. So this next part, I just want to go over some data to see if Tesla can actually realistically meet these targets that they've set. So having a look on their investor page, we've found here the Tesla Motors company overview that was written back in summer 2011, and we can see the ugly first concept version of the Roadster. So in 2011, they stated that in 2012 they wanted to make 5,000 Model S's, and in 2013 they wanted to scale that up to 20,000 Model S's. So having a look at Hypercharts, we can see here that in fact in 2012 they did produce 2,650,000 cars of the Model S, and then in 2013 they produced 22,477 cars. So as a Tesla investor, this really gives me a lot of confidence that the data shows that they can go out and execute their plans. In the slide right here, 2013 they predicted, while they were only doing 35,000 cars, that in the year 2020 they would be doing 500,000 cars, and they achieved this all while during a pandemic which devastated the whole world. So this is some serious information about their capabilities of realistically scaling up. So in this Excel sheet, I've taken the number of cars produced by Tesla every year, which is taken from Hypercharts, just to really see how they're scaling up. So we can see here from year 2012 to 2020 they have the capabilities to scale up their production. So part 4, my final thoughts. The first question really is, do I believe that Tesla will make 20 million cars in a period of 1 year? And the answer is yes, because looking at the data, we can see that they have the capabilities of being able to scale up, and also with building new gigafactories, they're going to be able to meet those demands. So the second question is, do I think in 10 years time they'll be able to produce 40 times what they can do now? And my answer is, I don't really know. We're just going to have to find out later on. But I think they've been already successful with their vertical integration model and also their advancements of battery technology. So the biggest thing for me is that they have faith in their gigafactory building plans to meet those targets. So as you may already know, in high volume manufacturing, it's really hard to get a constant supply of materials to be able to build at high capacity. So Tesla has identified this and innovating with their suppliers to say that we need as many parts as you can give us, because we have these gigafactories that can build a ridiculous amount of cars in a short period of time. So usually in technology, a lot of research and development is around the final product itself, but Tesla's a lot different because they're also looking at their manufacturing processes and also trying to figure out how they can make that more efficient. So just going back to the $25,000 car, I really think that this car is going to dominate the market because this is going to appeal to the average retail car buyer. I expect that this compact car is going to be about $50,000 to $60,000 New Zealand, which I think for a new car is pretty affordable, packed with a lot of technology that they're still going to bring out. And if they can produce these cars at high volume, I think it's going to make Tesla a lot of money. And hopefully as Tesla scales up their production, this will be reflected on their revenue, which will then reflect on their share price. So a lot of these plans make a lot of sense to me, and I'll continue to invest in the future. Let me know in the comments what you think, or if I'm completely wrong. As always, safe investing, and always make sure to do your own due diligence in the stocks that you buy. May the gains be with you, and I'll see you on the next one. Goodbye.